So let's dive in and get started. So thank you everyone for attending today. Today we're going to be going over the CFR Basics. Most of you are Cerini people, so most of you know who I am, but I'm Ken Cerini, Managing Partner of Cerini Associates. I'm joined today by my partner, Mahnaz Cavalluzzi, who is our resident expert in OPWDD, and with Kelly Mehr, who's a supervisor in our education department and works extensively on CFRs. So thank you again for everyone, and thank you for being part of the presentation, guys. We'd like this presentation to be interactive. We added an extra half an hour on this so that we have plenty of time to hopefully have plenty of time to talk. There's a lot of stuff to go over here. This is also set up as Kelly had mentioned, this is set up as a meeting format, so anyone can unmute and ask questions. We do ask that if you do have a question, please raise your hand. We can't really see everyone. So by raising your hand, you get pushed up to the front. We can see you, and then we can call on you, and you can kind of ask your question. And again, please keep yourself on mute if you are not asking a question, because the noise can be a little distracting. So thank you for that. Also, if you want, we're going to have the chat open. Please feel free to chat with each other, be interactive. You can also post questions in the chat if you want, and we'll try to get to as many of those questions as we can, whether they are answered live or one of the other panelists are monitoring the chat and answering the questions. In addition, in order for you to get the 1.5 hours of CPE credit, there will be poll questions that'll be popping up on the screen. As those poll questions pop up, you do need to answer those poll questions. Otherwise, you won't be getting the CPE credit. Kind of let's dive into this. There's plenty of information to go over. So Kelly, why don't you take it away?
Okay, so let's start with the basics. What is a CFR? CFR stands for Consolidated Fiscal Report. It's a standardized cost report required for organizations that receive funding from New York State agencies such as OMH, OASIS, OPWDD, SED, and DOH. The CFR is used to report program level revenue and expenses, support rate setting and reimbursement, provide financial information to the state, and demonstrate compliance with funding requirements. So it's not just a financial exercise. It will also directly impact how you are reimbursed and reviewed by your funding agency. At the bottom of this slide, you'll notice a link to the CFR Claiming Manual. And this is an extremely important resource for when you're preparing your CFR. The manual is basically the rule book for the CFR preparation. So it outlines allowable and non-allowable costs. It explains allocation methodologies. It has instructions for each schedule on the CFR and even each line. And it also includes all of the appendices, which we'll also talk a little bit more about in a few slides. So submission requirements vary depending on which state agencies fund your organization and which programs you operate. So basically what that means is not every provider completes every schedule. The CFR system determines required schedules based on your funding profile. So it's important before you begin to really understand what schedules you have to complete and understand what those schedules are. So we're not going to dive too much into this, but we wanted to have this here as a resource for you to kind of review if you need it.
Please also understand from the submission requirements, the one that's reflected here is the submission requirement for the CFR itself, but each funding source has its own submission requirements, which are all outlined within the CFR Claiming Manual. So again, if you are funded by an agency, you do want to go back and check to see what type of CFR you need to file, if at all.
So there are 4 types of CFR submissions. You have a full CFR, which is mostly what we're going to focus on today. There's also an Article 28 abbreviated CFR, an abbreviated CFR, and a mini abbreviated CFR. So which CFR you have to file depends on your program types and your funding levels. And then CFRs are due May 1st for calendar year filers and November 1st for fiscal year filers. There is a 1-month extension available. OPWDD extensions are automatic. But other agencies like SED, you do have to submit a formal request for the extension. So just make sure that you're getting that in on time.
Yeah, also keep in mind that if you don't get your CFR in on time, certain agencies have penalties. So each agency has different penalties. Some are more severe than others. So again, it is really important that that CFR does get in by the due date, especially in the world of OPWDD.
So now we'll talk about what information is needed to complete a full CFR. Keep in mind that this list is somewhat simplified, and there's definitely more that goes into it than just this list, but this is a good starting point. So first, all information on the CFR is reported on an accrual basis of accounting and in accordance with US GAAP. The audited financial statements will need to be reconciled to the CFR. The audited trial balance and general ledger will need to break out revenue and expense by program. So it's really important that organizations are leveraging the use of cost centers within their accounting software to more accurately allocate expenses across programs, because this will help you streamline year-end reporting. If things are already allocated in your books, it's less at year-end doing all the allocation methodologies for the whole year, as opposed to doing it throughout the year and using those cost centers. You'll also need to accumulate employee salaries by person for the entire year, whether that's fiscal or calendar. You'll also need to include a breakout of hours and salary expense to each program if the employees spend time in multiple programs. You'll need to accumulate the direct contractor hours and expense by program. This will get reported on CFR 4A, which we'll talk more about in a bit. You're also going to need your SED classroom approval letter. You'll need to use the SED rate setting unit manual. And for SED providers, you should consider a reconciliation of students served and billed to the stack report, and make sure that you understand if the reports don't match, why they don't match, because sometimes this will come up on desk audit. And then you'll need programmatic data, of course, including units of service that get reported on multiple schedules, CFR One, SED One, SED 4. And if there's any related party information, you'll need to gather that as well.
Kelly mentioned that you need to have a salary schedule by person. As long as you have a salary schedule, a salary information by position title code, which has the amount of pay and hours and everything, that's good enough. So it doesn't necessarily have to be by person, but by having it by person gives you a cleaner audit trail for when your auditors are coming in and looking at things.
It also makes it a little easier to identify those highly compensated individuals that need to be reported on the CFR. If you have it, by individual, you can calculate out their annualized salary more easily than if you have it by summarized by position title code. So it just makes it a little easier to manipulate the data for other parts of the CFR if you have it broken out at that level of detail.
So these are the core schedules that basically make up most of a full CFR. So the first one is really just agency identification. So it has the agency name, the executive director, the funding agency, the year end that the CFR is reporting for. And then you have your auditor certification. And then there's a supplemental attestation schedule, which basically is a list of yes or no or not applicable questions regarding compliance that you kind of have to go through and answer and certify to. The rest of the schedules we're going to get more into one at a time, so we won't really get into them here. So before we get into the CFR schedules, we just wanted to point out that the appendices are just as important as the schedules themselves. So we highlighted a few of the most reviewed appendices that we use during CFR preparation. So the first one at the bottom on the left is Appendix R, which outlines all of the position title codes and then the qualifications for who would fit that description for that position title code. The next one is Appendix X, which clearly outlines all non-allowable costs. And then the last one that's in green is the Appendix AA, which is the appendix that the auditors use as a guide when we're auditing your CFR. So again, just keep in mind that the appendices are a useful tool when preparing and even when reviewing your own CFR. Okay, so now let's jump into the schedule. So the first one is CFR One. So this is kind of like the foundation of the report. As you can see with the schedule shown on the screen, CFR One captures program and site information, including the program codes, your addresses, capacity, and units of service. It's broken out by each program. So each column is a different program that the organization operates. And at the bottom on this page, you'll also see the square footage calculations. So it is important that you're generating clear and accurate square footage calculations for each of your programs. So this is still the CFR One continued and basically the first page of real data that goes into it. And this shows your expenses by program. So again, each column is its own program. So first you have your salaries. Then it will go into your fringe benefits, and then it will go into your other than personal services, which includes food, repairs and maintenance, utilities, and so on. So again, going back to the allocation methodology, is when possible, it's really important that providers are directly allocating costs when they can in their accounting software. And then if you can't directly allocate the costs, it's important that you consider using allocation methodologies when reporting the expenses on CFR One. So for example, you might use square footage to allocate things like repairs and maintenance, utilities, telephone, even insurance. And something like food or supplies, you might want to consider using care days to allocate that amongst the programs. So it's also important to make sure that your allocation methodologies are reasonable, supportable, and you should try to keep them consistent as long as they're accurate. So this is, again, a continuation of CFR One. You'll see it continues to list out all of the OTPS services. And then it gets into equipment and property provider paid. So this includes things like depreciation or your property and equipment rentals. Try to understand that these schedules should really align with your depreciation schedules and your fixed asset records, and make sure that you're only including allowable costs. So again, refer to the appendices for things that would be allowable. And on this page, it shows the totals of all of your operating expenses on line 64. And then if you look at line 65, this is agency administration. So this represents the portion of the agency's overall administrative costs that gets allocated out to each program using the ratio value methodology. So all this means is that each program picks up a share of agency-wide admin expenses based on that program's expenses as a percentage of the total agency expenses. So it's not directly charged, it's basically spread proportionately across all programs. And we're going to talk a little bit more about agency admin when we get to CFR 3. And then section C of CFR 1 is all your revenues by funding source. So this has Medicaid, tuition-based programs, grants, contracts, interest income, and other revenue. So when reporting revenue, you just have to make sure that it aligns with each program and how it's funded and how the CFR is going to be used for reconciliation. And again, this is just kind of continuation of all the revenue lines. So for 4410 providers, you'll see line 92. For school age providers, 4408. So we already basically discussed all of the CFR One in detail in the previous slides, but overall, it tells a story of each program, what it costs to run the program, and how it's funded.
So real quick, Kelly had mentioned that personal services in terms of the different salaries that go into CFR One. And she also mentioned the appendixes and Appendix R, which deals with the position title codes. So if you think about CFR One, the position title codes that are going to flow through CFR One are your 100, 200, 300, and 500 codes. 100 are basically your they're the custodial staff, food staff, things like that. Your 200 level codes are going to be your direct service providers. So if you're in the OPWDD world, it's going to be those direct service providers. In the education world, it's your teachers and stuff. 300 level codes are going to be your therapists and your counseling staff. And your 500 level codes are your program administration staff. So those type or those position title codes are the ones that are going to flow through CFR One. In addition, the last bullet on this page, just please make sure you understand how you're funded and how your CFR will be utilized to calculate your funding. Because if you do have a deficit funded contract, which is an expense driven contract, you do want to make sure that your revenue and expenses equal each other. If you have more revenue than expenses, there is a possibility that some of those funds will be recouped. So it is really important to understand how you're funded, what that funding mechanism is, so that you can understand how the CFR and the information that's presented within the CFR is going to impact that funding.
And again, for allocation methodologies, we kind of already touched on this, but it's really important that you're leveraging cost centers within your accounting software throughout the course of the year to eliminate and help streamline basically year-end reporting. So again, we outlined some of the most used allocation methodologies. For staff and related fringes, you can allocate based on level of effort. You can use square footage for utilities, telephone, insurance, equipment, and property costs. Care days you might want to use to allocate food and supplies. and then ratio value.
And again, it's important that if you are using an allocation methodology, the CFR claiming manual does talk about certain allocation methodologies that you should be using. But if you're not using one of the ones that are specifically outlined within the claiming manual, please make sure that any allocation methodologies you use are reasonable, supportable, and consistent. You don't want to be changing your allocation methodologies every single year based upon which one is going to have a better result for you in that given year. So consistency is going to be important as part of this too.
Yeah. So CFR One is all about cost and revenue by program. And then you get to CFR Two and 2A, which basically shift the focus from individual programs to the agency as a whole. So as you can see on the top right, CFR 2 summarizes expenses and revenue by funding source. So each column is a different funding source, and it shows the total expenses and revenue that are reported on CFR 1. So these get auto-populated. There's nothing that you have to manually enter. The only thing that you would have to manually enter is column 9, and this is used for any other program that is not funded by one of the CFR agencies. And then at the bottom, you'll see CFR 2A, and this shows the information that's basically reported on your audited financial statement. So it will list your audit firm, the opinion that was issued, and then it lists your assets, your liabilities, your revenue, your expenses, and it even has some questions about line of credit. Basically, this is just a summary of what we already discussed.
All right, I guess I'll dive in on CFR 3 and take it from here. Thanks, Kelly. So CFR 3, as Kelly mentioned earlier, CFR 3 is for administrative costs. So this is where all of your administrative costs get presented. So we talked about on CFR 1, the salary codes 100, 200, 300, and 500. CFR 3, this would be your 600 level codes. So any employee that has a 600 level code will go into that salary line of CFR 3. To kind of give you because it might be a little difficult to understand, well, what constitutes a 600 level code versus what constitutes a 500 level code, which goes on CFR 1. So a classic example is if I have a OASAS clinic, and in that OASAS clinic, I have a receptionist whose sole job is to be the receptionist for that clinic. That would be a 500 level code, a 505 most likely. And that individual would appear on CFR 1 as part of that 500 level code. But if I have a receptionist and the receptionist's job is to handle the overall agency, so the entire organization, that person would be an agency administrative cost, and they would appear as a 600 level code, and they would appear on CFR 3. So again, I just want to make sure that you understand that there are slight differences between, and you have to really identify where people are working within the organization. So if someone is working from a global agency perspective, they're a 600 level code. And if someone is working programmatically within a particular program or across multiple programs, they would be a 500 level code. It's also important to understand the nuances between different organizations, because if you think about it, your CEO, your CFO, most of those C-level or C-suite staff are going to be maybe not your COO, but your other C-suite staff are going to wind up most likely in CFR 3, right? Because they're most likely going to be agency administrative staff. But some agencies do allow you to allocate some of the salaries from those staff to other categories. They wouldn't be a 600 level code. They might be a 500 level code appearing in one of the other programs. SED is one of the ones that doesn't allow you to do that. If you're a 601 or a CEO in SED, you're a 601 CEO in SED, and that's what you are. And that's where you put the staff, even if you're working within another area or within a program. And then that gets kind of discussed and handled on desk audit if you have where your CEO is working in a different capacity. So again, your admin costs, which go here, are those costs that are incurred in running the overall agency. So similar to CFR 1, you have your personal services, you have your fringe benefits, you have your other than personal services, you have your equipment, and you have your property and provider paid expenses. That's where your rent and leases and stuff like that will go. So as you go through this, one of the lines that I want to focus a little bit on is line 41, where you deal with adjustments for non-allowable costs. We go through, and when we audit CFRs, we often see that that line has nothing on it. And that's not always the case. So you just have to think when you're going through and preparing your CFR, are all the costs that are there allowable costs? As Kelly mentioned, within the appendixes, there's Appendix X. Appendix X lists all of the non-allowable costs that exist within the CFR claiming manual. So you really should be going through there. You should, as Kelly mentioned also, you should have a cost center where you're capturing your non-allowable costs throughout the course of the year. So it's easy to know where they are and you can track them. Things that people don't often think about but are quite common is many of you who are completing a CFR or have an agency belong to a trade association. And pretty much every single trade association does some level of lobbying. The portion of the trade association dues that you're paying that are lobbying in nature are not allowable costs. If you work within the SED world, you also have the reimbursable cost manual, which is the SED Bible in terms of what's allowable and what's not allowable. So if you are in the SED world, you have to pay attention to that reimbursable cost manual because that will dictate what is allowable and not. So you might have some non-allowable costs that have to get flowed through here or also flowed through CFR One, depending on whether they're non-allowable costs within the programs themselves that would go on CFR One, or if they're non-allowable costs within the administrative structure of the organization. Kelly had mentioned earlier that administrative costs are allocated based on ratio value. And ratio value basically looks at, so Kelly, can you do me a favor, go back one page to CFR 2? So
Yep.
if you look at the top part of this, and Kelly had mentioned that you have here your various programs. So the way the ratio value works is it looks at your total costs that fit within each one of these programs. It backs out your property related costs and it backs out your equipment related costs. So it takes total direct costs. So it'll be costs that are sitting on line 1, line 2, line 3, and line 4. And then you take the total of those 4 lines within each program and you see the percentage they are to the total of those 4 lines for the overall agency, excluding obviously administrative costs. And you calculate then, so if the OPWDD program was $1 million worth of costs on line 1 through 4, and the total of all programs, line 1 through 4 in column 1 was $4 million, 25% of your agency administrative costs would get allocated to OPWDD. And then using that same methodology, it would get allocated across all of the various programs within the OPWD environment. In addition, there are certain programs that do not draw down administrative costs. Those typically tend to be more grants. So in the SED world, that would be your IDEA grants. Your IDEA grants should not have any administrative costs. They fund directly what's budgeted within when you file for your IDEA funding. You provide a budget, so it funds just what's in the budget. Go to the next slide.
Another example there would be for the OPWDD world, if you have subcontracted transportation, that's its own column on the CFR that does not draw down any administrative costs. So aside from just contract related programs, that's another example.
So we've kind of talked about all of these items and you can see what fits into each category. So OTPS, other than personal services, includes accounting, office expense, insurance, utility supplies. Equipment is depreciation and rental. Your property provider paid is mortgage, depreciation, things like that on property related versus equipment related. And then again, this is all should match out to your audited financial statements. So if you're a nonprofit organization and you do a statement of functional expenses, you typically want to see that your CFR 3 ties out to your administrative costs on your statement of functional expenses. If there's a difference, you need to understand why there's a difference between CFR 3 and your statement of functional expenses. Again, if anybody has any questions as we're going through this, please chime in and ask those questions. All right, moving on to CFR 4 and CFR 4A. So Kelly mentioned that on CFR 1, there are certain back schedules that automatically populate CFR 1. Two of those schedules are CFR 4 and CFR 4A. CFR 4 deals with your staff. So this is where all of the staff will be reflected by position title code. So anyone who's on a W-2. And CFR 4A is where your outside contractors get reflected. And when we talk about outside contractors, these are only direct outside contractors. So the only staff that'll get picked up here on the outside contractor would be anyone that falls in a 200 level code or a 300 level code on the CFR. Going through this in terms of your CFR 4, you can see in that first column, it talks about your position title code. That's where the position title code will go. That is coming from Appendix R. The way this is set up, it's set up where the first page is going to be, the first page of CFR 4 is where all your 600 level code will go. And then after that, and that goes right into CFR 3. And then your following pages will be by funding source. And each one of those will reflect each of the various programs. So every one of these columns, you can see they're blank right here, but every one of these columns will reflect a different program. So if you have 17 different programs on your CFR 1, you'll have 17 different programs reflected in the CFR 4 in addition to the 600 level or agency administrative section of your CFR 4. Same thing with CFR 4A. CFR 4A will also reflect 17 different columns, whether you have outside contractors in every single one of them or not. So if we go to the next slide. So again, it reports salary by position title code and by program. It's important to understand the position title codes and what those position title codes or how those position title codes impact your reimbursement. In the SED world, you have direct costs and non-direct costs, and there's limitations on how much non-direct cost you can have. So staff that fall into a 200 level code or 300 level code are going to be considered direct costs. Staff that fall into 100 level code, a 500 level code, or a 600 level code, which comes across through the allocation of the agency admin, those will all be non-direct costs. Similar, that impacts the OPWDD world in the fact that different sections of your rate are calculated based upon where staff fall within your position title codes. So it's really important to understand each of the position title codes and how those position title codes are going to impact your rate. I don't know, Mahnaz, if you want to add anything there before I move on.
Yeah, so for the OPWDD program, certain programs that have an agency-specific rate, such as DAHAB, the direct care providers, so the 200 level codes, and the clinical staff, so the 300 level codes, directly impact your rate calculation. The rate calculation is based on a portion of your actual costs and regional average costs, but your actual costs have an impact there. So you want to make sure that you're putting people in the appropriate code, especially if you're putting people into a 500 level code that really should be more programmatic or clinical, because that could have a direct impact on your rate.
Yeah, and that's why it's really important when you're going through and you're preparing your CFR, and both Mahnaz and Kelly mentioned it, having that salary schedule that lists every single employee, because you may need to look at what their job description is, really understand what they're doing for the organization to see what category or what position title code each employee should have. And an employee can have more than one position title code if they're functioning in different capacities. So it really is important to understand each employee in terms of getting those position title codes correct. In addition, also making sure that you've got good accounting records throughout the year and you're tracking your cost by cost center so you know which programs that each employee worked in. It gets kind of tough at times if you have individuals who are, let's say, floating teachers in the SED world where they may be in one classroom, one program one day, and a different classroom, a different program the next day, or even within different classrooms the same day as they float in to do coverage for lunch and stuff like that for your teachers. So again, it becomes a little on the difficult side if you aren't going to track them directly by where they're spending their time. Then again, you have to have a reasonable methodology in terms of where those staff belong.
There's also there's also some nuances to the position title codes too. So like Ken mentioned, you want to be carefully reviewing the descriptions for the codes that you're using because some of them do have certain education or experience requirements where there could be a comparable code that does not have that requirement. So based on where you're putting that employee, they should be meeting those requirements. And if they're not, if you were ever to be audited by OMIG or somebody other than us, they could potentially disallow services provided by that individual if they didn't meet that requirement, whereas you could have just been using a different code that would have been better suited to that person's job description or experience level. So you do want to be carefully reviewing that.
In addition to the salaries, you also need to reflect on CFR for the hours that everybody works. And so it's going to be really important to capture those hours correctly. I know for a lot of our clients, they can get us the salaries because they track that in their general ledger and stuff, but it's not always as easy to grab the hours. So when you're pulling information and you're grabbing information, especially now with the ease now of going into most of your payroll companies and running reports from your payroll companies, just make sure that you are grabbing the information for your salary information, and that includes both pay and hours. And again, if you are working through your payroll company and pulling reports from the payroll company, don't forget that you also have to worry about accruals of making sure that you're properly accruing for salaries that are paid subsequent to the end of the year. So you back out your opening and add in your ending, and you have to factor in the hours for that too. So again, just keep that in mind. In addition, CFR 4 requires you to reflect the number of hours per week an employee works. And they show 35 hours, they show 37.5 hours, and they show 40. And then they have an other. So other is typically for anyone who's working more than 35 hours. If someone is working less than 35 hours, you would check the 35-hour box. And then from an FTE perspective, they would be less than one FTE. So if someone's only working 30 hours a week, let's say it's an educational program, you're open for 5.5 hours, your teachers are there for 6 hours a day, you would have 30 hours, you check off the box for 35 because other doesn't allow you to go below 35, it's only more than 35. So you would be in a situation where you would have less than one FTE for that individual or that class of individuals. We talked about the most common, sorry, go back a second. We talked about the most common position title codes, 600 for admin, 200, 300, 500, and 100 is also for, like I said, that's going to be more of your custodial and food service employees and stuff like that, which you find quite often in an OPWDD program and sometimes in an SED program too. We talked about the fact that salaries by program are carried forward to CFR One, line 16. That automatically happens. And then CFR 4A discloses your outside contractors, again, at the 200 and 300 level. One of the things when we get to SED 4, but I'll kind of mention it now too, your number of employees, your FTEs by employee for certain position, clinical position title codes, your 300 level codes, both on an employee basis for CFR 4 and hours on CFR 4A. Those are going to get rolled over to SED 4, but it doesn't happen automatically by the software. So you do have to make sure that if you have a tuition-based program within SED, and there are clinical staff that are used within that you're going to have to carry that number directly from CFR 4 and 4A over to SED 4 because it does not automatically carry. CFR 5 is where related parties get discussed. So in CFR 5, one of the things you have to remember is that if there is a transaction you have with a related party, for the most part, you're limited to the actual cost that is incurred by the related party. So you don't have the ability to make money off these government programs by setting up a separate company that charges more money to the entity that funds the special program. You typically see related party transactions with respect to rent, where maybe you'll have a separate entity that holds the building or owns the building, and that rents it to an agency that is funded by one of the agencies on the CFR. Or maybe there's a board member that owns the space and is renting the space to the organization at or below fair market value. You're still limited to the actual cost incurred. So there is no ability to make profitability. Well, I shouldn't say there is not. There are certain instances where it is allowable, but typically you have to have approval by the funding source or some sort of waiver that provides for it. I'm only aware in the SED world, I'm only aware of 2 waivers that exist overall. So again, it is not a common thing that happens. Continuing on this page, so here you would reflect any payments made to a related organization. So you'd have to outline who the related organization is, what program does it impact, what's the relationship, how much money are we talking about in terms of the cost that's flowing through the CFR, how much of that is allowable, and then that last column, column 9, adjustments to cost. If the amount in column 7 is greater than the amount in column 8, the amount in column 9 will show an adjustment, and that'll be a disallowed cost in calculating whatever the reimbursement rates are going to be, whichever program you happen to have. You would also reflect on here is if there is a, let's say, an employee who is related to a board member, or an employee who's related to a key employee, or if you're a for-profit business, an employee related to an owner. Those would have to get reflected in here. And even if you're an owner that's working within the organization, you should be reflecting your salary in here also. Again, in that case, the amount of the transaction reported in column 7 and the allowable cost would both be the same, as long as those salaries are fair market value salaries. As I mentioned, one of the more common disallowances that occur, or one of the more common areas of related party transactions, is rent. So if you do have a rental agreement, this is where you would show the actual cost to the related party. So you would reflect whatever the depreciation on the space is, the mortgage interest you're paying, any insurance that's paid, any property taxes, any other expenses that exist, to come up with your total allowable costs. And that's what would roll over to the previous page into column 8. So this is where the allowable costs calculation would happen. Excuse me, but this is only for rental properties. This page is, we don't see it used that often in the SED. Well, it's not used in the SED world at all. It's not an SED schedule, but in the other worlds, it's potentially used. Here's where you would reflect any amounts that were paid to or received from a related party, and it gets reflected here in terms of the amounts. So again, CFR 5, it's designed to reflect or to track related party transactions. Again, if you have related party leases, you have to understand the regulations that exist in the SED world. If you're entering into a lease, you have to get approval for that lease. Leases have certain limits with respect to allowable levels. They have to be fair market value or better. Again, if the related party has less costs, it's disallowed. Payments to related organizations, individuals that provide a WASAS, OMH, OPWDD, SED, and/or DOH agency administration. All of that stuff is what's going to happen here on CFR 5. And again, as I said before, you have to disclose self and family related relationships. If we move on to CFR 6, this is one that we often get questions and pushbacks from clients, especially ones that are for-profit businesses. That first question says, do any employees of your agency also serve on the governing authority? So if you have a member of the board of directors of the organization that is also an employee of the organization, you have to check the yes box here, and you have to list who that is and what position they play, position title that they play within the organization. And if you are the owner of a company, you are pretty much part of that governing authority because you're the ones who are making decisions within the company. This doesn't affect, obviously, OPWDD and some of the others where you have to be a nonprofit organization. But if you're, part of the ownership team, you're getting you're employed by the organization, you're most likely part of that governing authority. So you should be listed here. Question 2 says, does anybody get paid as a member of the board of directors and trustees? Just because you're an employee of the organization, you wouldn't put your salary down here. On line 2, that's only if you're getting paid to be a board member. So if you're paid to be a board member, the salary or the amount you're getting paid would be listed here. But just because you're an employee, if you are an employee and you are getting paid, that goes back to CFR 5, and you'd be reflected on CFR 5. Here, this is something Mahnaz has mentioned earlier before. Here's where you have to outline any employee that's getting paid over $125,000 on an annualized basis. And you also have to outline your C-suite, your 601, which is your executive director, your 602, which is your assistant executive director, and your 603, which is your CFO. So anybody who falls in that category, even if you don't make $125,000 or more with respect to that category, you still have to be listed here. If you do make annualized salary over $125,000, you also have to be listed here. In the SED world, that happens a lot where you'll have a teacher who's working on a part-time basis, or maybe a psychologist or psychiatrist who's putting in a small number of hours. But when you annualize that salary, it comes out to more than $125,000. So if that is the case, you do have to still put them on here, which is why Mahnaz had mentioned earlier that it's important to have that detailed salary schedule to be able to track this information. If you have an employee that functions under multiple position title codes, so maybe you have an employee that is a 605 or 606, whatever title code, but they also work in another title code and they happen to make over $125,000. What you would do is you'd have to check off that position title code, that little box next to the position title code, because you would check that box if they're going to be charged to multiple places, because unless that box is checked, the amount on this schedule for 601, 602s, and 603 should pretty much tie back to what's on CFR 4. Also here, you would reflect any fringe benefits or other benefits that these staff are receiving. Here you would also, on this page, you list your 5 highest paid independent contractors who are receiving payments in excess of $50,000. So if you have any individuals who are being paid as independent contractors who are making more than $50,000, on this page of CFR 6, you would outline your top 5 individuals or organizations that you're paying. So that's what goes here. I think we covered all of this stuff. Actually, I think this says Yeah, this says 150, but I think the amount is is it 50? Because this says independent contractors over 150, but the previous page says 50. And I'm drawing a blank on what the correct number is.
I think the
I think it's 50.
50,000.
Yeah,
It's
so
50, yeah.
yeah, I think it's 50. So this page needs to be corrected. It should be 50. We move on to the next page. This is we're kind of skipping all the rest of the stuff. We'll come back to the other pages. This is the reconciliation page that appears at towards the end of the CFR with all of your supporting schedules. The purpose of this schedule is to reconcile your CFR and your financial statements. Right, so on that first line, you should be reflecting your revenue and expenses. So expenses go on the left side, revenue goes on the right side from your financial statements. And then you go through and you list any additions or subtractions that you have in terms of reconciling items between your financial statements and the CFR. So things like on a revenue side, if you have unrealized gains and stuff, that might be something that comes out on the revenue side. Any in-kind donations would come out of both sides, both as an expense and a revenue item. You could be in a situation where you had a transaction that was funded by a grant in the past, a capital expenditure that was funded by a grant, and you charged it directly to the grant, but you capitalized it for accounting purposes on your books. Ongoing depreciation on that would be a reconciling item because it's not an allowable cost on your CFR. So this schedule really, the purpose of this is to make sure that there's a clear reconciliation between your financial statements and the CFR in terms of total costs. So this is going to kind of reconcile everything back to that CFR 2 schedule, that total cost column of the CFR 2 schedule. This kind of outlines just some of the things that we just talked about, so I'm not going to kind of go into that. As I mentioned, in addition to the core schedules, the stuff we kind of went over, each of the funding sources has additional supporting schedules that come into play. So SED has their schedules, which are the SED schedules. OPWDD has their schedules, and then DMH and OMH have their schedules. So we're going to go through some of those schedules now. So SED1, this is where you would outline the various classes that you have by program. Here you would outline, based on the various programs, how many students you have, how many classes you have, what are the ratios of those classes. So if you have 5 classrooms running during the summer and 4 classrooms running during the school year, you'd break out on line 202, the number of summer classes you have, the number of school year classes you have. Then you would show the number of students that you have from an FTE perspective. And if you have different ratios, so if the classroom ratio, let's say in your 9100 program, which is your full day self-contained classroom, let's say you have some classrooms that are 812, 8 students, 1 teacher, 2 teacher assistants. Some classrooms that are 613, 6 students, 1 teacher, 3 teacher assistants. Some classrooms that are 1212. You would list each one of those. 201 would be one batch of those, 301 would be another batch, 401 would be another batch, and you can go on to another page if you need to. But here's where you would kind of go through and reflect all of your different classrooms, the different ratios. In your 9135 program, if you happen to have CIT, here's where you would show under the CIT the number of mandated CIT units as well as the actual delivered CIT units. That would be on lines 111 and 115 respectively. So again, this schedule is really designed to provide all of the programmatic statistics in terms of the children that you're serving within each of the various programs that you operate. So again, if you have one-to-one aides, you would show the number of one-to-one aides that students that are receiving one-to-one aid services would go in here. So this is where everything goes. The one difference is on early intervention and evaluations, your number of units delivered go up on CFR One, on the first page of CFR One. But for the most part, most of your statistics with respect to your educational programming are going to fall under SED One. One of the things that we use this all the time for, and we're going to talk about this probably more deeply when we get into the intermediate class that'll be happening in March. We use this all the time to ensure that employee hours make sense. If I've got 5 classrooms, I need 5 teachers. If I've got 5 classrooms with a ratio of 8:1:2, I need 10 teacher assistants. So you can use this to kind of get a feel for whether the ratios that are reflected on CFR 4, the staffing patterns reflected on CFR 4 make sense. You can also, as Kelly mentioned earlier, that the number of students you have should reconcile back to the stacks, which is what your billing is. So you bill through the stacks. So it should reconcile back to the stacks. If it doesn't, that could come up as a desk audit question. Moving on to SED4, as I mentioned, that first column, which is your salary column, column 2A, and your second column, column 2B. That information you have to pull directly from CFR 4 and CFR 4A and transfer it over to here. The purpose of this schedule is to really look at the related services that you have and to determine 2 things. First of all, in column 5, it will show you how many mandated services were delivered. And in column 4E, it'll show you how many mandated services were mandated. So this allows you to take a look at delivered versus mandated to see what your delivery rate is. Obviously, your delivery rate cannot be more than 100%. If it is more than 100%, there's probably something wrong. The other way this is used from a productivity perspective is column 6 looks at the number of units of service you delivered compared to the staffing patterns you have in place. So again, if that percentage in column 6 is over 100%, there's probably something wrong because that means you delivered more services than you had staff available to deliver those services. You typically see those percentages are often low, and if those percentages are too low, that could impede your ability to go for a waiver later. And again, we're going to save that waiver discussion for our March discussion. For delivery percentages, we typically like to see somewhere around 75% delivery percentages. That doesn't mean you have to be at 75%, but 75% is usually a pretty good job of delivery. You want it 75% or more. And I think most of the other stuff here I kind of talked about. So, Mahnaz, I'm going to throw the torch over to you.
Finally. So I'll start with the OPWDD slides. I'll talk about OPWDD, DMH, OMH, and finally filing your submission. So these next few slides are related to the OPWDD 1 and 2 schedules. So these are obviously for OPWDD funded providers that have ICF or IID programs. So that's usually program code 0090 or 1090. And it reports all of the services and supplies provided by those programs. So you want to refer, Kelly mentioned the appendices, Ken did as well. Appendix G has all of the OPWDD programs in there. So you want to make sure that your programs are aligning to the definitions within that appendix for those program codes. So there's a few columns here. There's columns 1, 2, 3, and 4, and each of them sort of reports things a little bit differently. So column 1 is used to report any items or services exclusively purchased with resident Medicaid cards. So you could see here, there's the different service types in that first column. So there's different pharmacy services, equipments, service coordination, transportation, therapy services, things like that. So column 1 would be for individuals who paid for it with their resident Medicaid cards. Column 2 is for if any of those items or services were purchased by the ICF and funded via their rate. through their general rate reimbursement. So in each of these columns, you would mark off whichever one is applicable. Column 3 would be marked off if there are any services or supplies that are generally purchased with the resident Medicaid card, but because their coverage limits had been met, the ICF incurred some costs related to those services or supplies for the individual. And then finally in column 4, that's where you put the dollar amount that the ICF expended and was funded via rate reimbursement. So columns 1, 2, and 3 are sort of just check boxes that you mark off as applicable. Column 4 is where you put the actual costs incurred by the ICF, and that was funded via rate reimbursement. So that sort of summarizes it here. So now if you go to the next slide, OPWDD 2, this schedule would be completed if on OPWDD 1, column 2 or 3 of line 6 was selected. So if you go back just for 1 second, Kelly, we could see that line 6 is other medical supplies. So then OPWDD 2 would then detail out what those other medical supplies were. So if you go back forward one more, thank you. And you would mark off whether these specific types of supplies are included or not included within that line 6 of OPWDD 1. So it's just further detail of that schedule. So in summary, the two schedules here, OPWDD 1 and OPWDD 2, are really to ensure program level accuracy in reporting the services and medical supplies provided or being used by the individuals in the ICF and IID programs.
Yeah, I went into the SED world because SED is so much easier to say than OPWDD.
I know, it's a tongue twister a little bit. So moving on, here we look at the DMH schedule. So these are for DMH funded programs for agencies. So DMH 1 is the easiest one of them all. It's auto-generated by the software based on the information within CFR One and throughout the CFR for full CFR filers. So it's automatically entered here. You don't have to enter anything within the software for this. So DMH2 is really where we get more into the meat and potatoes of it. And this is a schedule that's used to report claimed expenses, revenues, and deficit funding amounts by program type or contract number. You have to have a separate DMH2 for each state agency and local governmental unit or LGU from which the service provider receives aid to localities funding, either through the direct contract or indirectly through the LGU. So each schedule must be county and state agency specific. So you could have more than one schedules or multiple columns here as needed. So most of the information within DMH2 does tie back to the CFR One schedule, but it does need to be entered here more manually than DMH1, which was automatically generated. But you'll see, we'll talk about it on the next slide. There are instances where it could be different. So really where this DMH2, go back to DMH2, where DMH2 sort of differs or what's sort of specific to this schedule is that bottom lines 44 to 49, which is the deficit funding. So that's information that's unique to this schedule, and it breaks out the various sources of the deficit funding that the organization receives. So that's whether it's state funding, local government funding, voluntary contributions, or if they're non-funded expenses. So the expenses that are not funded through the deficit funding. And those expenses offset the net operating costs that are reported in line 43. So the takeaway for this DMH2 schedule is that your net operating costs in line 43 must agree to your deficit funding in line 49. So this, lines 1 through 43 culminate into this net operating cost number. And you want to make sure that when you're allocating out the sources of your deficit funding, that it's equaling that net operating cost number. And within the software, it'll give you error messages if you don't agree. So you sort of have to revisit. It tells you specifically which items are off, and you may have to revisit those line items to see if there was a mistake made or additional allocations that need to be made or things like that. So what DMH3 does is it breaks down the funding sources for the amounts entered into DMH2, and it's required for each agency or LGU that provides funding. So here it has some additional information it takes information from the prior schedules and adds in the total people served and the total units of service to get to your gross cost per unit of service, your net cost per unit of service. So it's sort of taking that same data and breaking it down further to provide additional information and analysis to the users of the CFR. So in summary, we sort of touched on all of this. So in DMH1, in full CFRs, it's automatically created from the entries on the core schedules, and you don't need to enter anything yourself or manually. DMH2 is used to report claimed expenses, revenues, and deficit funding amounts by program type or contract number. There needs to be a separate DMH2 prepared for each state agency and LGU. And then DMH3 is used to list by funding code and funding source claimed expenses, revenues, and deficit funding. It's used to present the data on DMH2 by funding source, contract, and program type. So it's sort of taking the same information and manipulating it into different buckets, basically, so that each user has the information that they need. So the next few slides talks about the OMH schedules. So OMH1 reports all units of service by program and site, and satellite locations should not be reported separately per the OMH rules. So like I mentioned earlier, when you're referring to the OPWDD schedules and OPWDD programs, you'd look at Appendix G. When it comes to the OMH programs, you'd look at Appendix F for the program descriptions to make sure that you're using the correct programs and reporting the information as it should be within the CFR. So depending on the program type, either weighted units of service, either weighted visits or service hours rendered by the program or site are included here. So the weighted unit of service methodology is based on Medicaid reimbursement rate levels for medical assistance payment for outpatient programs for mental illness. So these are going to be more specific to your organization, the types of services that you provide. It's not really a one size fits all for all OMH providers. So you really need to have the level of data to be able to report it on these schedules. OMH2 reports specifically Medicaid units of service. So OMH1 is all units of service. OMH2 is specifically Medicaid units of service, and it's used for validating the Medicaid utilization. So here you'll see only Medicaid fee-for-service and Medicaid managed care line items. OMH3 captures the number of persons served by program or site and is used by OMH to analyze the population served. So it looks at, the number of people at the beginning of the year, added, removed. It's basically a roll forward of the people served during the year. So OMH4 reports the units of service by payer and helps determine eligibility for safety net payments. So this schedule has to be completed based on the date of service rendered and only for services provided during the reporting period. So you'd detail out by payer the total of visits and revenue earned by payer. So in summary, OMH1 includes all units of service. OMH2 captures the Medicaid units of service. OMH3 captures the number of people served, and OMH4 is determining eligibility for the safety net payments. So now we get into how to file your CFR. So if you've made it through all of those schedules and you've entered all your information and you're ready to finally upload your CFR, there's a few steps here. So the first thing is compiling all of those schedules, way back on slide 2 or 3 where Kelly mentioned all those schedules that you need. You sign into the CFRS system, which is the Consolidated Fiscal Reporting System. So it's web-based software, and you start to enter all of the data into your CFR. So you start to keep punching, manually all of the data that you've compiled into the various schedules of the CFR. The software does sort of guide you through it. It doesn't go sequentially page by page. It goes sort of section by section. So you start with some basic data about the organization, the programs, the funding sources, things like that. And then you move on to, you start with CFR 4. So you start with salaries and then you do CFR 4A, and that information flows into CFR 1, and then you enter CFR 1. So you're sort of bouncing around a little bit in the software as you enter the data, because there are certain schedules that flow into others. So you're not, when you print out a CFR and you're looking at it, sequentially page by page, that's not necessarily the way that the information is entered or how it makes sense to be entered. So once you've done all that and you've manually entered all of the information, you want to assign a DCN or a document control number. So you perform validations on the CFR, and that's where it'll sort of spit back any diagnostics that you might have. So if you've missed something, there are certain checks built into the software that can help you identify any errors before submission, and it actually won't allow you to assign a DCN if there are certain errors there. So if you are not able to assign a DCN, it'll tell you exactly where you need to go or what discrepancies it's finding. You need to clear out those issues, and then you should finally be able to assign the DCN. So that DCN is specific to that CFR, validated on that date. If you need to make any changes to the CFR for, any reason, if you identified an error after you're reviewing it yourself or sharing it with the client and they identify an error and you need to revisit the CFR, you now have to assign a new DCN. So why this matters is because the DCN on everything that is submitted needs to be consistent. So there are a few pages in the CFR that need to be signed, which the next bullet point talks about how now everything is e-signed. So it's a little more straightforward. You don't have to worry so much about submitting the wrong signed pages that don't agree to the DCN of the CFR that you've submitted. But basically, once you've gotten to the point where you're ready to submit the CFR, everybody agrees, no more changes, you click a button. So it's as simple as that. You submit the CFR, and then the parties that need to sign it can log in and sign. So that's typically the CPA firm and the CEO of the organization or the executive director. So the CPA firm can log in and sign, the one page that they have to sign, CFR 2 or, little I. And then the executive director or CEO of the organization has 3 pages that they need to sign, so they can log in and sign separately. And once that's all done, your CFR is essentially complete. Along with the CFR, organization needs to upload audited financial statements. So in years past, you had to upload signed PDFs of all the pages. Now the only other document that's really being uploaded is the financial statements. There are certain New York City providers that also need to prepare an FTE OAG Excel file and separately email that to the required address.
The thing to keep in mind here is now with this new system that's in place, you definitely need to make sure that you're communicating with the agency, and the accountant need to make sure they're communicating to ensure that both of them are registered within the system and assigned to the organization. The other thing to keep in mind is that if you are a provider, that in order for an accounting firm to be able to sign off on the CFR, if you go to the opinion page of the CFR, it asks about peer review and everything. So if the organization or if the accounting firm is not a peer-reviewed accounting firm, they cannot sign a CFR.
So in summary, CFRs are audited by your external auditor. So you should work with an auditor that understands your funding mechanism. As Kelly mentioned earlier, Appendix AA of the CFR manual is essentially the audit program that auditors use to audit the CFR. We talked about a lot here. Obviously, there are a lot of specific nuances to funding sources and CFR preparation. It's not like any other reporting that's typically done. It differs significantly from a financial statement. So it's important to work with someone that really understands the CFR, the ins and outs of it, and all of those nuances that we sort of touched on during this presentation. CFRs are essential for compliance, reimbursement, and financial transparency. So one, they're required, they need to be submitted, and they need to be submitted timely. It's important that the information is accurate because it directly impacts your reimbursement as an agency, the rates that you're being paid. So, you want to make sure that you're maximizing those rates and making sure that everything is accurately reported so that should you ever be audited or have your CFR audited, you're able to support the numbers within the CFR. And it also offers financial transparency for Medicaid-funded agencies. So your funding sources are looking at this information to see how their dollars are being used. So CFRs are subject to audit and final reconciliation by your funding agencies. Funding agencies are looking at this information. Like we've mentioned several times now, it impacts your rates going forward. They could potentially audit and ask for further detail. You typically do see desk audit questions come back after each CFR season, after each CFR is filed, you'll get a letter that has 2 or 3 relatively benign questions usually, or modifications that need to be made to the CFR. So it's not anything that typically has a significant impact to the organization, but there could be a true funding source audit, that the agency is subjected to in the future, which could really dive into the numbers within the CFR and potentially result in recoupments to the agency. So you want to make sure that you're comfortable with all of the numbers that are being presented. And like I mentioned, you want to make sure that the CFRs are being filed timely to ensure compliance and avoid potential disallowing interest or other more significant penalties in the case of OPWDD providers. So this slide just shows Ken, myself, and Kelly and our contact information. So if you have any further questions on any of this, if you're not a Cerini person on the call, you could reach out to any of us. We'd be happy to discuss anything in more detail. And we do have some time for questions since we extended the presentation time a little bit. And make sure you sign up for our next presentation, which is going to dive deeper into some of the more specific aspects of SED reporting and the CFR.
Thank you, everyone, for participating. Hopefully this was helpful. We will be sending out the video of this to anybody who's non-Cerini related. Anybody who is Cerini related, we'll park it in our library. We'll also be sending out the slides. And again, we're always here to answer questions if anybody has any questions. And please, we'll also be sending out an evaluation form. When you get that evaluation form, please send it back so that we can make sure we're doing things appropriately, and we'll make sure you get your CPE. All right. Thank you, everyone. We appreciate it.